economic uncertainty could be both a blessing and a curse when it comes to M&A. Like on the one hand, like acquirers have uncertainty, maybe they're less willing to buy. On the other hand, targets are much more willing to sell for reasonable prices. Like, how do you think that trade happens, and how do you think that stacks up in 2023?
Yeah, I mean, I would say generally speaking that uncertainty is the enemy of deal making. Buyers are reluctant to find the trigger finger if they don't have a good handle on what they anticipate the future to be.
Yep.
And we have lots of uncertainty, from the economy to interest rates, supply chain, the war in Iraq. The list goes on and on.
Cookies.
I think we're at peak uncertainty kind of right now. Taiwan, and also market change I would describe as having a lag factor, which is to say buyers tend to adjust value and expectations almost immediately, right? They just look at the public markets and see where things have traded off. Whereas sellers need a few quarters for the new reality to set in, the 5 stages of, denial, anger, bargaining, all that kind of stuff. And sellers are human. And so they're like, well, I wouldn't sell now. And then maybe, a few quarters later, when they realize this is the new reality, or wherever we kind of settle out, then you'll see deal making happen again. It's why we've seen a slowdown. So the data clearly shows we've seen a slowdown in the last couple of quarters. And yet we fully expect it should human patterns match what's happened in the past, which is, when you get such a substantial movement so fast, it takes sellers a few quarters to realize if this is the new reality, then that's simply what they have to deal with. The other thing is, I think we, step back a second and maybe with a broader lens on it, think about, what drives M&A, and it's largely change. So, M&A is a strategy choice, whether it's organic growth or, build versus buy. You can also partner, but that tends to be temporary. And when change accelerates, like technology change, regulatory change, or market change, like we've all had recently, then companies tend to favor M&A. It sort of gets them to the market faster. And it was all that change in the marketing technology sector in the last few years that drove deal activity, programmatic adoption, data deprecation, privacy regulation, shift to streaming, e-commerce acceleration. All those factors are change agents that we believe will continue. So once we get past this sort of market reset, we expect activity to pick up again.
One of the good things about ad tech in general is that, like, the entire market changes every couple of years. Like, how you go about things, the whole technology stack changes. It's both good and bad, because it leaves a lot of players like holding a bag for, like, especially if they have more calcified technology. But it also means there's a lot of new players, there's a lot of new entrants that could come in. And I imagine that, like, that level of change in such a big industry, I don't think that's happening as much in, I don't know, oil and gas or something. That level of change in such a big industry can drive a lot of M&A.
100%. I'd put I put the time frame more like 6 months. I mean, everything changes in ad tech in 6 months. And it's one of the reasons that attracted me to this sector in the first instance, which is if you have a large, growing, fragmented, complex, and dynamic space, then that's a perfect opportunity for strategic advice.
Yep, that makes sense. Over the last few years, some of the acquirers have been these, like, private equity firms, and they've gotten more and more active and writing bigger and bigger checks. Do you think that is going to continue, or do you think they will, just given all the other market uncertainty, that they will be less active in the next few years?
Yeah, you're right to observe that private equity's presence in the sector is relatively new. I'd say it largely picked up about
DoubleClick back in the day they did, which was probably the first real private equity success. But then it really hasn't happened as much.
But you're seeing it in big numbers in the last 5 years. And for the last 2 years, private equity has actually been the largest buyer group in the sector.
Oh, I didn't know that. Okay,
so they actually lead it at this point. And I attribute that to just the gestation of the maturity of the industry. So if you look at the sector now, there are, enough private equity appropriate targets, that is to say, scale and profitability, that has attracted private equity. Going forward, I mean, this is like a phenomenal scenario for private equity, right?
Because there's roll-up opportunities.
Interest rates are more expensive than they were last year, but
Yeah.
still historically low, and valuations are way off. So if you're a sector-focused, private equity firm with fresh capital to put to work and an investment thesis to pursue, it's now you got like a 50% off sale.
Yep. And there's and maybe like whereas like the classic strategic buyer might be a little bit more hesitant, the financial oriented buyer, like the private equity firm, might be potentially could be more aggressive.
More aggressive, more agile, and yet I don't. I want to make a distinction here. This isn't your grandfather's private equity. The people focused on the private equity firms focused on this sector tend to act quasi-strategic in the sense that they understand
they put a few things together
deeply. They put some things together, and they're playing more for multiple expansion necessarily than cost cutting and net income to just run the bottom line up.
Yeah, interesting. And potentially also in a uncertain environment like it, you could see a scenario where it could make sense to consolidate a bit, where you could, whether it's quote unquote the bad word, the roll up, or other ways of like of building a more diverse set of products, having a little bit more heft with the regulators, and the big regulators are Google and Apple, right? Those are the ultimate regulators that are out there. There's like the lesser regulators, which are like the EU and in the US, but being able to have a little bit more heft with the Google and Apples of the world. So do you see any of these things being able to drive basically people who want to get quote unquote bigger?
Absolutely. And in fact, rarely do you have an industry sector the size of this one, right? It depends on how you want to cut it, but it's well over $1 trillion globally in marketing. And, that's an enormous TAM. Yes, it is dominated by these large, big tech platforms, but even the non-walled gardens is still an enormous market and growing, I might add, which is why it's attracted so much venture capital, so many companies. I mean, the whole premise of sort of creating the Lumascape 15 years ago when I did was to sort of, wait a second, get a handle on the fragmented sort of ecosystem and understand how all the players worked. I have long advocated that this industry, like every other industry, ought reasonably mature, rationalize, and consolidate such that we end up with fewer companies in the middle, with higher volumes and at lower take rates. In other words, kind of like everything else. Like look at ERP software. In the 80s, there was over 200 competitive ERP companies. Now there's 5 of any consequence. Many industries go through that kind of wave. This one hasn't really matured there.
And is that just because the change is happening too fast, as you mentioned, to bring that maturity in?
So I would attribute the sort of lack of end state consolidation as a function of, yes, it's the dynamics that you referenced, but also the fact that the TAM keeps growing. I mean, this is a sector. I mean, digital ad spend has grown over 20% for 25 years.
Wow.
Name me one other industry that has that persistent a growth rate. I don't think there is one.